Hello, traders. Cousin Benny coming to you from theclosingprint.com, Sunday, the 30th of June, 2024. In this edition of your weekend video newsletter, we'll discuss the indices which have stalled at all-time highs. Bulls and bears are in agreement with price, and we have bank earnings starting off in 2 weeks. We have 5 bullish indicators, 11 are neutral, and 4 are bearish to start Monday trading. In this holiday shortened week, we'll start off with a bit of caution. S&P 500 has been moving sideways for the last couple of weeks, closing a bit lower on Friday, testing the 9 EMA. With 2 distribution days, MACD is fading a bit and stochastic still embedded. We're watching RSI with a bit of divergence. I've also noted in the red rectangles previous occasions where we moved sideways as bulls and bears agree with price holding at the 9 EMA. So we'll be looking for a repeat with banks earnings in 2 weeks, travel and leisure stocks, transports, and consumer discretionary names showing some potential strength for a follow-through this week, while many of the big cap tech names in the New York FANG index have stalled and are consolidating from recent gains. A bit of a double top with a lower high in RSI showing some divergence. MACD and stochastics bouncing last week, stalling on Friday. One way I'm thinking about playing this, if we do see a fade, maybe some butterfly trades or credit spreads, call credit spreads at the highs, selling a call above current prices on these 10 stocks with the potential for Google to pull back a little bit, as well as some of the other candidates in this index. As you would expect, the Qs also showed a similar bit of selling on Friday. Nothing to be alarmed about yet, closing above the 9 EMA, but absolutely fading from the high of the day on Friday. Possibly test the 21-day this week. 9, 21, 50, 200-day are all pointing up and to the right, so the trend is bullish, with a mixed signal from the New York Stock Exchange Composite, new highs, new lows, 2,000 stocks, broad measure of market participation, gave us a green bar on Friday. Above the zero line, the moving averages turning up, the black line. Advanced decline is sideways to slightly higher. And we got a green elder stick. So 2,000 stocks. We'll watch the New York Stock Exchange for a clue. Whereas smaller indices like the New York FANG index, only 10 stocks, and perhaps indicating that there is some breadth improvement to start the week. Growth got a bit ahead of itself in the upper panel. We're above the 21 EMA. However, we're looking for prices potential to stay above that bullish moving average, with value showing some potential for continuation in this rotation that we've seen recently, especially with the banks reporting in 2 weeks, with some improvement in transports that would affect the industrial stocks as well. While the S&P Equal Weight Index gives us a neutral signal, closing right on the 50-day moving average, still in this triangle pattern, with the number of stocks trading above the 20-day pushing a bit higher, back above 50%, and the number of stocks above the 50-day moving sideways, another neutral to bullish signal. The transports turning up last week, showing a bullish divergence and breaking a downtrend. Looking for this to follow through this week. As the rate of change in the transports continues to improve, the signal line is above the moving average as we look for transports to continue this move higher into the month of July. Transports following through with the other sectors either neutral, with additional strength showing up in software, breaking a downtrend, and the consumer discretionary consumer staples becoming more bullish. going forward. So look for this continuation. Moving averages turning up is telling you to be more bullish into the month of July. Finally, the month of July, as you know, is the seasonally strongest month of the year for tech, a development that could assist in holding the S&P 500, the Qs, and small caps in a tight trading range. After all, advanced decline percent has been rising on the S&P, mid caps, small caps, and the NASDAQ in descending order, with only the NASDAQ sideways to neutral. Maybe that picks up in the month of July as seasonality kicks in. Yields have maintained a bit of strength, although it is in a descending channel. It moved back up to the 200-day moving average on Friday. If you're bullish equities, you want to see this get rejected and move lower. Note the Bollinger Bands coming together, so that's telling you this could stay like this for a bit longer, with Chair Powell speaking this week on Tuesday and non-farm payroll on Friday after the July 4th holiday. We'll be watching the 10-year yield for a response, with the 50-day rolling over. 9 and 21-day are moving down and to the right, and this descending channel giving us reasons to think we could see a tailwind into the month of July. Risk on indicators remain risk on. We did test that trend line, a subjective line, of course. We're at the 21-day moving average. The 50-day is down below at 93.69. So if you're bullish, you want to see this hold above the 21-day moving average, and we'd like to see IBB, biotechs, and IWM both continue to move higher. IBB did fade a little bit, along with Bitcoin. If we can get these to turn back up, those indicators would give us a tailwind. Looking for the advanced decline to continue the improvement that we saw on Friday. Overall, we're more neutral to slightly bearish to start the week, with S&P price action closing right at the volatility trigger. We need to stay above these levels, in particular this 5,400 critical support level. Looking for the 5,500 call wall to shift higher to 5,550, potentially 5,600 over the next few trading days. Additionally, if you're bullish equities, you want to see the US dollar make a lower high and move back down towards the 200-day moving average, not move higher, in addition to having Brent crude and commodities continue this sideways range. The 50-day is flat, the green line, with range-bound commodities imparting very little effect on the indices, giving us a neutral signal. Finally, with copper fading, more than likely we'll hear Powell talking about the economy, starting to show indications that they've been looking for, basically slowing a bit. As copper indicates, over the last 6 weeks, we've just been fading, imparting some resistance in the construction and related industry groups over those 6 weeks. For the most part, copper, gold, and silver are all giving us neutral signals. This week, we'll be looking for these IBD 50 stocks to continue higher, as well as stocks from the scans indicating that the banks have been showing strength recently, in addition to travel and leisure stocks. For example, Hilton Worldwide, about to break out to fresh 52-week highs. Volume was well above average on Friday. MACD and stochastics are bullish, and RSI is showing strength of trend is improving and most likely will continue over the next couple of trading days. Therefore, we'd be looking for a breakout. Hyatt Hotels, with a break above the 50-day a few weeks ago, this is starting to move higher, grinding along the upper bands. Volume picked up on Friday. MACD, stochastics, and RSI are showing strength of trend. We also saw strength in transports. Look for these to continue. We broke above the 50-day moving average on Friday. Do we get a continuation? RSI suggests that maybe we will. For now, we're watching stocks like CSX, the rails, noting volume over the last couple of weeks, looking for a push above the 50-day and the 200-day, with RSI showing strength of trend improving, with a few of the airlines like JetBlue starting to show some strength, pushing off the lows, stochastics and MACD rising, volume increasing over the last couple of weeks, with RSI showing strength of trend. T&L, Travel and Leisure, another stock in this group looking like it may follow through. Look at the volume, MACD and stochastics turning up, RSI rising. This one could follow through this week, showing an earnings date of July 24th. It beat last time around. Whenever all four of these are green and the chart is bullish, look for a follow through in the short term as we proceed into earnings season. Travel and Leisure Company is the world's leading membership and travel company with nearly 20 travel brands across its resort, travel club, and lifestyle portfolio. Look for Travel and Leisure to continue higher this week. Watch the banks as well. We've got earnings in 2 weeks on Friday. We've got JP Morgan 2 weeks from now on the 12th of July, reporting its earnings, testing 52-week highs again. Volume was pretty decent on Friday, with the markets pulling back, showing relative strength. RSI, MACD, stochastics all pointing higher. Look for these banks to continue. JP Morgan, Citigroup, and Wells Fargo all report on July 12th. These all look bullish. Look at the volume, MACD, stochastics rising, RSI showing strength of trend, and Wells Fargo. All of these popping on Friday, following through on a Thursday bounce. MACD stochastics rising, volume increasing, and RSI showing strength of trend. Many of the bank card companies also showing up on the most actives last week. Here we have Discover Financial. Volume was above average. Stochastics MACD turning up, breaking out, trying to take out 52-week highs. RSI showing strength of trend on Friday. With Synchrony Financial also breaking out. The company supports TJ Maxx, Home Goods, I believe Michaels. I'm not sure who else. If you did any shopping this weekend, I went through TJ Maxx. I couldn't believe how crowded the store was. Lots of good deals. As the stock shows relative strength, RSI rising, MACD stochastics, and volume all indicating we could see follow through, with the company reporting earnings in the third week of July. Additional stocks that we're keeping an eye on as the markets showed some weakness and some rotation out of some of those big cap tech names on the New York FANG Index. We saw stocks like Palantir, for example, showing relative strength that didn't pull back like the indices, indicating there could be an underlying opportunity. Companies from the medical, device, healthcare industry groups like RxSight, looking for the follow-through. Tight Bollinger Bands, but moving back above the 50-day moving average. Note the bullish three white soldiers, RSI rising, showing relative strength as the markets pulled back. Volume above average, stochastics and MACD turning. A commercial stage medical device technology company dedicated to improving the vision of patients following cataract surgery. Whenever all four of these are green and the chart is bullish, that gives us an indication that we could see a follow-through over the next several weeks. Make My Trip also trending above its 921.50 and 200-day moving averages. RSI is just gradually grinding higher in the Travel and Leisure group. Expedia briefly above the 200-day last week. Look for this to follow through as well. And at a minimum, hold above the 50-day moving average. RSI turned back up on Friday when the markets pulled back. And during the summer months, of course, watching for retail stocks to continue. Abercrombie & Fitch, after earnings, that big white candle over there. The company doesn't report again until August 28th. Last time around, it beat earnings on May 29th. All four of these bullish. Note earnings growth and the earnings surprise. Revenue growth is solid for a retailer, 22%. That's crazy. And pointing to a potential follow-through over the next several weeks. Keep an eye on it. Not going to jump in it. If it does start to move higher on Monday, Tuesday, this might be an opportunity to trade Abercrombie and Fitch as RSI shows strength of trend is persistent and improving. As previously mentioned, I like TJ Maxx. I'm not interested in buying it up here yet. It looks like it's trying to base at the highs, but it does bear witness to the strength in retail, along with companies like Tapestry, formerly Coach brands, in addition to discount retailers, which are showing some signs of a bounce. Still in a descending channel, needs to get above the 50-day moving average, volume well above average on Friday. Volume well above average on Friday, with zoomies trending and volume above average on Friday, back above all three moving averages, looking for a break to the upside in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, June 30th, 2024, with your weekend video newsletter. Make sure to check out the stocks in the list below. These have all been scanned for potential follow-through. The stocks that are underlined are stocks that I'm watching, but looks like they're showing a little bit of weakness. Could see a follow-through this week. Stocks with an asterisk I'm looking at in particular, and looking for a follow-through in stocks that we'll post on the watch list later tonight. I'll send out around 12 midnight on the East Coast, around 9 o'clock on the West Coast. So be sure to check your inbox for that later tonight, and we'll see you in the morning. Take care, enjoy the rest of your weekend, and we'll see you then. Ciao.